Good morning, ladies and gentlemen. What is happening? So here is this discussion about this NASDAQ play. Some of you might want to take advantage of it. Some of you might not. Some of you just cool with crypto. There's no problem. But there's no reason why you can't apply this strategy in other assets. Now, what we're going to talk about today, guys, is how to exploit the stop hunts with NASDAQ. And you will see them. And when you see them, everything will come together. And you'll be like, wow, it really is so visible once you understand what you're looking for. To my right here, ladies and gentlemen, I just wanted to dive into a little something for you just to get you to understand how you can develop, and rolling on from yesterday's resistance and pain discussion. Right here, these are my journals, okay? And on my shelf to the right, I've got another 9 more books like this. I was journaling back in the day, writing all my frustrations, my anger, and all the things that I was doing right and wrong when it came to trading. This is why I say to you all, always get a pen and paper. And if you want to just practice the art of projection, there's 2 ways you can do it. You can simply draw lines on the chart. That's cool. All right? And you want to understand how price is moving, take notes. Write out what is actively happening in the chart. And you'll start to understand that as you write this story of behavior, you will then start to get into the idea that maybe this behavior is going to lead to where I think it's going to go, because you're breaking it down. So an example would be you go onto the 5-minute time frame and you write out, price so far has been trailing away from this zone, and I'm expecting price to do something, and you're waiting for the movement. As you're waiting, you'll look at the chart and be like, it's taking a little bit of time to come away from this region. I'm looking at the stops. I'm looking at the wicks. I can see that every time they come down, they start to move up. This is what these books are all about. And they go back quite a long time. This one is my stock analysis book back in the day when I was reviewing stocks. And if I turn, look, I've got all these pages here. And this is one aspect of it. And the first stock that I wrote about was back in 2007. Okay? And all we're talking about here is, I just literally put down, closed in the low range after a sell-off on above average volume. Okay? So I would wait till the end of the day and I would write out what was going on with my stocks that I was watching. Okay? Going in, I did what? At ATW, I did 1, 2, 3, 4, 5, 6, 7, 8. So I did 8 stocks that day and wrote out what they're doing. So I've got here, showing interesting action, touch of the 50-day, pullback demonstrated support. Next day closed on average volume on above average volume of 1.7 million, strength and support. All right? And I would break down each stock like that based on how they were behaving. Because in my mind, I was telling myself, how can I be one with the chart? How can I understand the behavior? And the only way that I could do it was if I were to get a pen and paper and write it out. It subconsciously does something to us. It installs in our mind an awareness of where you are, how you can align yourself with the movement of the chart. Guys, at the end of the day, there are no indicators that will guarantee that you're going to make a profitable trade. The only indicator is price. How am I to understand the way price moves? And it goes with such precision at best of times. Don't get it twisted. I do get it wrong sometimes, and I'll stand up and admit that. Okay? But it's as you do this practice, if you can accept that you can be wrong, then you ain't going to be so messed up on when you are wrong, because at the end of the day, most of the time you are right. Journaling, ladies and gentlemen. Start your day off by getting into the chart, small time frames to understand the behavior. And mark my words, when you look at the chart after you've been doing it for a long time, you will find that you won't necessarily have to keep writing things. It will be there in your mind and you'll be talking yourself into the idea of, okay, what could price be doing now? It's holding that 50, moving up and down. And you would then naturally gravitate to pulling out a pen and paper because you want to make the conviction. You want to just get it in your mind because you will recall that information. There could be a point in the chart where you write up and you wrote about a previous behavior. They keep on moving price up and down. The wick's not finalizing. Why can't it get above that point? Ask yourself questions when you journal. See, a lot of people journal and say, I entered at 50, I sold at 60. What a great trade. Triangular formation, pennants, whatever it is. Done. I made 1%, 2%. Okay, cool. I think that's terrible journaling. That's just data input. True journaling is a reflection. Journaling is understanding how is your mind feeling at this point in time. Which leads me on to what we're going to discuss right now. So take what we did yesterday, looking at the seeking, the resistance and pain, and you can apply that concept and the idea of journaling to this strategy. Because my goal after this video is to get you in your minds to be aware of its presence. You're going to see the examples very shortly. Let's roll with it. Okay then. NASDAQ. I'm going to get rid of everything. Get rid of that. Get rid of this. Get rid of all my drawings. Now, here we go. This strategy, guys, works on this principle. At times, the NASDAQ likes to initiate stops. Okay? Check this out. You can either go onto the 5-minute or the 3-minute time frame. For the nature of demonstration, we're going to use the 3-minute time frame. When I start doing this, you'll say, oh my days. Watch this. Actually, get my drawings back. Have I got my drawings back? No, I haven't got my drawings. Never mind. Never mind. Okay, here we go. So, it's the New York session that's always going to be the main mover. So go back in every New York Brink session and do this. Let's start off with this one. Now, this was FOMC. Okay? First example. If you can't see it, no problem. If you do see it, I'm making reference to this. Look at this structure. Deviation away from the 50 EMA. The Brinks box initiates a stop hunt rise. Rip to the downside. Keep that in your mind. Next, New York session. 2 plays. No deviation away from the 50 EMA. Green vector candle can't finalize, but what does it do? In the Brinks, stop hunt rise, rip to the downside. Yeah? Let's go back. New York session, Brinks box. What do you see? Deviation away from the 50 EMA, stop hunt rise, rip, vector candle recovery. All right. No, not that zone. Sorry, not that zone. This is the weekend. What day was this? Wednesday. Yeah, this is the Brinks. All right. Let's go back again. Brinks box. Stop hunt rise. rip to the downside. You're looking for vectors. They've been crawling up. Stop hunt rise. Always happens. I'm going back and I'm going to keep on showing this to you. Look. Stop hunt rise. Rip to the downside. Green vector candle can't make it above the 50. Go back over here. Green vector candle can't make it above the 50. Go back. There's the Brinks box. Sorry, ignore that. There's the stop hunt. Stop hunt rise. Can't get above the 50. Rip to the downside. The blue vector candle confirmed that the weakness was there because they just wanted to quickly shake out the shorts. Rip to the downside. Green vector candle zone recovery. Go back. Same zone there. Brinks box here initiated a straightaway. But they had initiated the stop hunt low at this point and then they continued back up. This was the buy program, given that they were moving down aggressively anyway. And then they shifted out. The principle of the Brinks box at the lows played out perfectly here. Initiate the stop hunt rise, stop hunt low, stop hunt rise, rip to the upside. Let's go back again. Oh, do you see it again? Brinks box, stop hunt rise. Happens right there. Green vector candle can't get above the 200, can't get beyond the range. Look at the vector. Can't go above the previous vector that came in. Green vector, violet, drop. Green vector, violet, drop. Look what happened here. Stop hunt low. Rise. Stop in volume candle 1, stop in volume candle 2. Look at the volume down at the lows, starting to decrease as it's moving lower. Done. Let's go back. I'm going to keep doing this. And I will keep doing it. And you'll say, shoot, that is crazy. The Brinks here, straight away. But they gave us a little bit of a structure here. And it played out perfectly. There was no stop hunt. And if there's no stop hunt and they've been holding price and there's no attempt to move lower, the first green vector candle on the 50 EMA is where you take your trade. Let's go back. Oh, again, Brinks box, stop hunt rise. But this was a horrible range, but look where they did it in. Because if you were trying to run the short here, you would have been getting shaken out. Stop hunt rise, rip to the downside. Let's go back again. Here we go. This is a tricky one. New York decides to do stop hunt rise, drop, continuation to the upside. It wasn't as distinctive. Another story. Red vector candle to the side of the chart right there. W formation. In the Brinks, stop hunt low, shift out to the upside. Brinks box, stop hunt low. Again, most of the busiest points in the chart are in the Brinks with the NASDAQ. Stop hunt rise. Sets the narrative, rips it to the downside. Keep on going. I ain't going to stop. This is all I'm going to do for you right now. Straight away. You only saw that just a few moments ago. Straight away. Starts with the green vector above the 5 and 13 EMA in a 3-minute time frame. Continuation up. Brinks ain't stopping. Deviation away from the 50 EMA. Stop hunt rise. Violet vector candle. Stopping volume candle. Look at the volume. Slowing off. Deviation away. Come back into the 50. Vector candle recovery 1. Vector candle recovery 2. Vector candle recovery 3. Stopping volume candle recovery 4. Look left and you see them and they're eating that liquidity. This is my point. Notice how the fastest move up that takes out this range right here is the range that sets up the narrative to drop. Because if they were going to try and go beyond this and continue, it would have been a slower move. Okay? It would have been something like this. But that didn't happen because they came in at speed. When they rush at speed during the brinks, that's when they're preparing the drop. Let's go back. Now, look, this is textbook. Stop hunt low, shift out. Stop in volume candle 1, stop in volume candle 2. Deviation away from the 50 EMA, rip to the upside. Oh, do you see it? I bet you do. Stop hunt rise, vector candle recovery. Just look at the zone that you're trading. You see this first green vector candle. It moves in, comes into this zone. Blue vector, violet vector. Things might be slowing down. Stop hunt rise. Finalizes the vector. You're waiting for the green vector candle. Rip to the downside. Take your scalp, take your trade, done. Straight away. But they did do the stop run. Look. They came back up and they came back down. They grabbed the liquidity and shifted out. Oh. Here we go. Stop hunt rise, green vector candle. Did you not just see that only a few moments ago? You just saw exactly the same structure. Big push away from the 50 EMA, rip to the downside. Again. Oh, there you go. Nice little stop hunt rise. This is a little bit of a tricky one because it's where there's an aggressive move down lower and it still continued. But stop hunt rise, principle, rip lower. Oh, look what they did in the UK session. They did it there. Oh. I guess you kind of understand what I'm doing here. Stop hunt rise, rip. It's all going to make sense in a second. Oh, hello, sir. Bang. Stop hunt rise, rip. Why do they keep doing this? Oh, straight away, shifting out. Okay. You wait. I'm not finished yet. You might not like this. But you watch what I'm doing to your minds in a minute. Stop hunt low, shift out, mark it off. Done. You want to master this game, ladies and gentlemen. You do these little exercises, I promise you. You'll understand it. Here we go. We got two situations here. Stop hunt low, rise. And then stop hunt rise, drop. As you keep going back in the charts, guys, you will come to understand that you'll be waiting for a much cleaner, definitive move. Look at this. Where have you seen this? You only saw it a few moments ago. I'm going to keep doing it. I don't care what you say. I've got time to do this. Now, this is a tricky one. Coming away from the 50 EMA, they didn't necessarily do the stop hunt, but they did come back down to here and test the 50. All right, look left, and you've got vector candle region right here, and you've got vector candles all the way up in this zone right here as well. So they had done the trap up, down, and it was a very choppy session, but eventually they did follow through with it. So you will encounter these moments. And if you do get into this situation where you're indecisive as to whether you trade it or not, zoom out, mark off a structure. W formation, rise up, retrace, rise up, consolidate, continuation to the upside. There's your pattern. Where am I going? There you go. There's your structure. Enter long here on the idea that the stop and volume candle is going to come into play because of the wick. They recover the full wick. Couple of more. I'm going to get into the gritty of it. Oh, there we go. Stop and rise. Rip to the downside. It always happens in the New York session. There's that US Brink session right there. What do you see? Stop hunt low. Shift out to the upside. Bang. Oh, there you are. Now you've got a 200 EMA and a stopping volume candle to help you out with the move. Green vector candle, deviation away from the 50, recovery of the vectors in the zone. Happy days. Oh, goodness gracious me. It's there again. This time it was a little bit sooner because they initiated the stop hunt rise before US and then they continued with the narrative on a straightaway move. Cool. All right then. Tricky. News plays. So you wouldn't be trading that. Zoom out. Another Brinks box. Tricky play. Straight away. Stop hunt rise. Drop. Pattern structure. W formation. Rise, retrace, shift out. Stop hunt rise in the New York session, rip to the downside. One more time. Oh, goodness gracious me, stop it. Stop hunt low, rise, Brinks box. So with that being said, guys, here is the criteria on what you've got to be aware of when you're trying to exploit this sort of thing. Okay? Upon the creation of the Brinks box, you are expecting stop hunt rise, stop hunt low. Okay? There has to be a move down or a move up, depending on where the Brinks is going to form. All right? This is the structure. Okay? There has to be a corresponding move. On top of that, you are anticipating a moving average from this region here in the Brinks. So when price moves away from it, you are expecting them to try and come away from the 50 EMA. This is the area where the stop hunt attempts itself. Likewise, 50 EMA would be here. Okay? Price will be down here. Stop hunt low, retrace back up. Once you've established that structure, okay? When it comes to the actual trade playing, because what they'll do is they'll set up the move and then they will follow through with the opposite. Two instances can happen in the New York session, especially with NASDAQ. They can set the first high. Then they can set the first low. Okay? Upon the creation of the first high or the first low, it's practically mimicking what they had done in the Brinks. So look. What have you done there, bro? Oh, bloody hell. Wait there. Here's an example. Here's the US Brinks session. Stop hunt rise, drop. They did it again in the same session. Stop hunt rise, drop. Then they established the high of New York. Stop hunt rise, drop. Look how they repeat the same behavior in the Brinks in the same session. They did it 3 times, guys. And this, if my knowledge serves me correctly, was the reason why I took my trade to go short. Because they ran this play. They did it once in Brinks, dropped it. They did it twice, dropped it. The final time sets the narrative, drop. 1, 2, 3. Let's go back. Stop hunt low in the Brinks. They ripped it up. They established the New York high. They dropped it down, recovery of the vectors. And what do you think they did? They established the low and they recovered the vectors. New York is famous for what? Reversals. They did exactly the same in the Brinks, and they did exactly the same in the session itself. Look left, vector candle recovery. Whenever they hit a recovery point, they always bounce away from it. One more. This one's not so clear. That was news. Okay, we'll do this. In the Brinks, stop hunt rise, rip to the downside. Okay? They bring it back up. Stop hunt rise in the high of New York. They set the high. They ripped it back down again. They set the low. They brought it back up again. Is it starting to click? It's all based on what they did in the Brinks. Look what the Brinks did. Stop hunt rise, rip in the same Brinks session. They waited and they formed the high. Stop hunt rise, rip in the New York session. Stop hunt low, rip in the same session. They just repeated everything inside of here twice. Up, down, up. Up, down, up. Go back in the charts. We just went and found the stop hunts. Now I'm bringing you the structure of what goes on when they form the high and the low. Let's go back. Are you starting to see it? US Brinks, stop hunt rise, drop. Bring it back up. Reversal is the low established. Cool. They bring it back up. As they continue to climb, you're expecting some stopping volume or some movement. Stop hunt rise. Drop. They did it again in the same zone. Drop. Notice that they didn't start the low until Sydney Open. So New York's low was here. And they didn't take it until Sydney got opened, which would then eliminate the low to be valid in New York. That was the low. One more. This is a news play. It's a bit tricky, but you could take advantage of it. Stop hunt rise, drop, forms the low. News plays brings it up. Tricky. Don't take it. Here we go. Classic. This one was just a long squeeze. Climbing too long. Stop hunt rise, rip to the downside. They didn't even go for the low. They wanted the liquidity. But here's an example again. Stop hunt rise, rip. Bring it back up. Stop hunt rise, rip. Stop hunt rise, rip. So, ladies and gentlemen, that right there is the basis of the strategy. Remember what I said to you. Go back in the charts and find this. The more you keep going back in the charts and marking each zone off, the more you're going to see it. So then when you do come to the real-time price action, it's going to be easier for you to navigate the likelihood of them doing this move. Back to the seeking of resistance and pain. If you're already in a trade where you believe that they've actually started the stop hunt and you're not in that zone of profit yet, the resistance and the pain that you get from that is going to tell you whether you are in the move or the development of the stop hunt or you're just coming out of it, because it's going to be a bit of a tricky zone. The US Brink session is the fastest moment in the chart. They either initiate a stop hunt rise or a stop hunt low or a straightaway. You're waiting for the response of the New York Brinks. Once they initiate the stops and then they rip against it, you're establishing a low or a high to be formed. Look for vectors. Look for points in the chart where they can go back and test traders' intent. Look for where they can go and test where other traders' resistance and pain resides. That right there is going to help you take advantage of the NASDAQ, especially the NASDAQ. And you can do this same thing with other assets. And that's your homework. Go back and take this exact same way of looking at things and run it in the charts. 3-minute time frame, 5-minute time frame, whatever way you want to see fit. But I promise you, it's when you recall and you go through this practice that you're going to get it. I've only done this all the time. I went back. And I wrote out everything, books, journals. I needed to train my mind. You go to the gym. You might think that by picking up, you getting a barbell and just lifting up your biceps like this, happy days. Well, what if I just want to do one arm and just have the one arm and pick a heavier weight and lean down and be in a different position? Principally, I'm working the bicep, but I'm just doing it in a different way. This is exactly the same principle. I'm getting you to try and understand that you've got to train the eye to see what it is that you're looking for. You can't see it in hindsight. You're not going to see it in foresight. You just look at NASDAQ, you don't think it's going to be there. But now that I've brought your attention to this sort of behavior, it's going to stick out like a sore thumb. And you're going to be like, they're going to go for the low. So remember, New York always in NASDAQ, New York likes to hit the lows and the highs depending on the type of trading it is and where we are in the markets. This strategy right here, it can save you from experiencing too much resistance and pain. But understand that when you are in a trade during the brink, so there's two things you can wait for. You can wait for the brinks to finalize and then they'll go for the low. So you'll miss out on the volatility, but you'll be waiting to catch that low or the high. Or you can be in the trade once you've assumed that the fast move in the brinks is the setup for the buy or sell program. Let me know what you think of this one, ladies and gentlemen, and I hope I haven't bored you to death. But you know what? Given that I've just gone back in the charts and continuously shown you examples of it just on the 3-minute time frame, I would like you to do the same. I'm telling you, even you guys who are new to the Patreon, go back and do this practice. And I promise you, you will come to the chart and you will start to navigate. You will start to understand how to project. And I'm not giving you no false hope here. I'm being serious. I've proven several times here in this exercise that they do the same thing. So now what you've got to do is just say, okay, I recognize that. I recognize that. They do the same thing at a different time. And that's all we're looking for. It's the when. Mad love and respect, ladies and gentlemen. I'll see you in New York. Peace.